The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to this week's market update, analyzing potential opportunities inside the Nadex markets. So first things first, guys, sorry that I was unable to get on last week. For those of you that know, I'm an East Coaster, and we had some crazy weather. We had that tropical storm that came through, and typically we do pretty well in tropical storms, but I wish I could show you guys the pictures. We had wasn't me, it was actually the one of the houses at the beginning of the development. A tree trunk bigger than my one son fell and knocked 3 power lines over. They were down. We had no power for about 4 days, and it happened about 2 hours before, so we couldn't scramble to get another speaker in for you. So thank you for coming back this week, and I apologize for missing it last week. It was an amazing week of trading. I hope everybody else was able to get out there and get some good trades on. Tons of opportunity. So again, I'm very excited to share what we have going on this week. All right, so first things first. Welcome back for those of you that have been here. For those of you that are brand new, let me tell you just a quick kind of minute long who I am so you can kind of see why I do the analysis I do, and more importantly, why am I looking at the charts the way that I do? Where do my opinions and kind of beliefs come from? Okay, so for those of you who don't know me, my name is Brian. I'm the president and CEO of Keep Trading Simple. Now, my trading style is what I would consider kind of, I focus on the basics, right? You guys ever heard that analogy, KISS, right? Keep it simple. That is what I believe in. I believe that there are way too many distractions in the markets, on charts. Again, the more, quote, tools you have, the more manipulation that can occur with you. You know, they can send you false signals, all kinds of crazy things, right? I really kind of dive in. I'm a price action trader, so I look at the way that candles are formed. Now, I just said candles. I don't focus on this particular market. I can do it on all markets, and that's what's really kind of what has led me to where I am right now. Now, I started trading back at the late 2000, kind of early 2001 time period. You guys know what was happening during that time, right? The tech bubble. So I got to watch really the tech bubble happen, and then the markets rally and came back again, and then the housing bubble came down, and then I got to see what we dealt with, a couple years ago as well. So I've traded through a number of different types of market conditions, and I started just like most people do. I started looking at stocks and then options. I ended up finding foreign currencies about 6 years in and fell in love with that market because of the 24-hour nature of it. I learned how to trade futures. I spent some time, traveling around the world, really U.S. and Canada. I didn't get to go overseas. I was supposed to, but ended up kind of leaving that realm. I was a financial advisor for a very short period of time. I got on the inside. I wanted to learn more about the markets from something that somebody from the outside couldn't see, and it really opened my eyes to a lot of misconceptions of what I thought I believed turned out to be untrue about the markets. Got to see how important bonds were. As I said, left that industry rather quickly. I wanted to teach people how to do it, and then again, that's why I do these presentations. So, you guys will see some boxes on my charts. Again, as a price action trader, I'm mostly looking for supply and demand. So if you hear me use that terminology, that would be why. All right. So with that being said, let me dive in. And it's funny seeing this picture. This picture is only about a year old. The boy on the left, his hair is actually down to his shoulder, and the girl can actually, the baby here, she's 2 now and can put her hair up in a ponytail. So it's amazing how much in 1 year. Now I wish I could say that I look younger too, but I feel like I look older. But we'll see. All right, so let's start off with our Nadex risk disclaimer. We're going to be talking about charts and potential trade setups, so I want to make sure that we are covered here. Trade on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter the transaction, including fees. The information presented within this presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell a financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And Nadex is a registered trademark of the IG Group. Okay? So let's go through the agenda. So first things first, guys, I'm going to cover the upcoming news events for the week. Now, it's obviously Tuesday. Yesterday was pretty flat, and I'll cover what we have today and going forward. We'll also cover what are the kind of latest or brightest news stories. Again, the most, the newest as far as age goes, but then also the hottest news stories, the biggest ones that the most people are looking at. Very important to do this right now with kind of the amount of news that we have this week and where we are with the economy and perceptions. The media is driving a lot of what we're doing right now inside of the markets. And let me give you a quick example. You guys saw the non-farm numbers from last week. They were actually better than expected, right? Meaning the market had factored things in. They were better than expected, but what did we hear from the news? there was a huge drop in, a huge drop or, a huge increase, or, huge drop from, the jobs from before. Well, yeah, because the number before was just completely astronomical. It was the first, rally back again. But instead of talking about how the forecasts were all too negative and that it was a positive number, it was great, the media had to swirl everything and make it negative. So again, understanding where the news and the media are right now in the markets, extremely important because, again, perceptions and retail traders' wills bend to what the media sees, right? What the media feeds them. So we're going to cover that. Then let's dive into the indices and we'll talk about where are the indices, where are potential trading opportunities for the rest of this week. Then we'll look at currencies. Now, currencies is having kind of an interesting day. We got one or two movers, and then everybody else is kind of flat. We're kind of like waiting. But again, not uncommon. It is August, and we're the second week of August. This is a very, very popular time for vacations. Kids haven't gone back to school, whether it be virtual or not. College kids are just starting to go back. Parents are actually just starting to drive them back to school and things. So it is actually a very slow time in the markets, but there are still some opportunities in the currencies market. And then we'll dive into commodities. I don't know if anybody's looked at a gold chart today, but yeah, there's definitely some movement inside of the commodities market. And that level that we've talked about probably for the last, 3 weeks, 4 weeks in oil has still coming in there and been just an absolute magnet and bouncing point for the market. So we want to make sure we cover oil as well. All right. So let's dive across and let's look at news. Let me pull a window in here real quick. All right. So let me make this a little bit bigger for you guys. As you know, this is one of the websites that I use. There are multiples, but I like to use Forex Factor because it has this scanner at the top. It's right in your face. It's very easy to use for me. I like it. Again, I'm primarily a currencies trader. What it does is it shows me what has been moving in the last 24 hours. You can see right now, not a whole lot minus the dollar yen. The dollar CAD, pushing to the downside. That's something that I had, been talking about last week. Again, nice little push there. And then obviously the pound yen. Besides that, for the most part, currencies are rather flat. The reason why is there's no news today. 2 o'clock this morning, we had a claimant for the pound, but besides that, we don't have anything until we have the New Zealand cash rate tonight, right? Nothing. And again, when the markets, think about it. What are the markets and what are the media talking about during the day when there's absolutely no news releases? No real big bond auctions, no nothing. What are we talking about? That's where the news media takes over. And we kind of can, we can kind of see what some of the things are pushing here. Now, tomorrow, you know what? Let me just do this. Wednesday, we actually do have some pretty nice little data setups. Early morning, we start off with the pound and GDP and the preliminary GDP. Check out this number. Look at this right here. Previously, the preliminary GDP number was minus 2%. And you think minus 2%, pandemic, that's kind of expected. But then all of a sudden, look at this. This is what the forecast is for tomorrow morning. Minus 20.5%. Okay, so even if you were not a currencies trader, having this drop from -2 previously to -20, do you think there could potentially be some movement in the pound tomorrow? Absolutely. Okay, now if you're a West Coaster, this isn't even the trade. It's 11 p.m. at night. Okay, so you can get in there early in that one. Now, 8:30 when we start getting back into normal trading hours, right, the New York time zone, we get back into CPI. Now, CPI is also an extremely important figure. Why? Consumer Price Index. That is inflation. Well, what's one of the biggest moving commodities right now? I mean, we hear about stimulus. What's been moving? What does everybody in the world have to buy right now? What does everybody talk about? Got to buy gold. Inflation, we're printing money, right? Well, the reason why they tell you to do that is because when money is printed, it's a hedge for inflation, right? To hold your value. Well, guess what? If we do not see inflation coming in with the CPI number, the Consumer Price Index, is there any reason to keep buying gold? Maybe not. So again, that's a big number tomorrow morning. Followed by crude oil inventories. Now check this out. Crude, look at this. Forecast, -2, it came in at 5. Huge miss. Then the 29th, they expected to have $1 million or 1 million barrels in surplus. Bam, we missed it by 10 million. Huge difference. Then last week, again, 3.4 came in at -7. So they have been grossly off on oil. Okay. This week they're coming in as a forecast of -3.4 million barrels. So again, could this be a big number? Absolutely. Could it be a big trading piece, right? And then tomorrow night, unemployment rate. Okay, this is also another big one. Again, it's expected to get higher. And last I checked, the Aussie, economy is, they're beyond COVID. Their numbers are looking great. They're already recovering. They were one of the first to kind of be exposed to it. Their numbers are still going up. So again, another, a bunch more trading opportunity here. And again, Aussie will affect gold. It'll affect the Aussie dollar, the Aussie yen. There's a lot of trading opportunities. Thursday, we have this unemployment claims number. Okay, we get to see what's really happening. Is the economy restarting itself? Is it going down? Is it going to continue to go back up again? What are the effects of the new closures, right? How much, how bad is it going to be? Are they going to continue to close? And then we go into Friday, and again, Friday is retail sales. Now, retail sales, in my eyes, for the United States is one of the most important numbers. Everybody across the entire world wants access to the U.S. consumer. Okay, retail sales includes that number. Again, we're going to see if the consumer is buying, and the consumer buying this retail sales number does a lot of things for us. It's a leading indicator. It's letting us know, are we spending money? If we are spending money, that's where we get good earnings. Again, it brings confidence back into the market. If we're not confident in the economy, we're not going to spend money. That's just how it works. So retail sales is always a great trading number as well. And the fact that it's just the U.S., if you guys know my strategy, the parabolic retracement strategy, this is a nice one. And even so, this is another example of when I talk about the media, right? So last time we had 7.5% increase in retail sales. This time we're only expected to have a 1.9 in just a standard retail. So if this comes in at 2.5, that is better than the market had predicted. But you know how the media will spin this one? Oh, there was a 5 percentage point drop in retail sales this month, putting a negative spin on it. And again, that's why we have those parabolic moves back and forth. Okay, that's the exact example of what we saw last week with non-farm, right? It was better than expected, meaning that the market has to react and adjust itself to the retail sales number, but the media puts a negative spins and, oh my God, it was so much less. It's like, yeah, but it was better than expected, right? Better than expected. So great trading opportunity. And then again, followed up by University of Michigan consumer sentiment afterwards. Again, consumer sentiment is kind of a secondary for me to retail sales, but a lot of opportunity this week in news, right? A lot of good ones. Now, they're not numerous. There's not 30 of them. But if you are limited on the hours that you can trade, there are some really key things here that give us great opportunity, great potential at times that are very easy to capture, right? You know that this one, again, if you're a West Coaster, 11 o'clock, I need to check this one. 8:30 in the morning here on the East Coast, 9:30 p.m. on the East Coast. You can definitely find the time to get out here and start trading some of these news releases if you're not already. All right. I have some waves. I was like, wait, what's going on here? I got some waves. All right. Here we go. Let's dive into charts. All right. First things first, let me pull this up and I'm already looking at gold. Look at that. Let's go across to the indices. Now, we had a high put in last week, right? This is one of those things right now that I still believe that NQ, being as fluid as it is, it has the power to go higher. Okay, I have areas up top at 11,237.99, approximately in that range. Again, this is ECN based data, so you need to focus it on, use your charts. But I do believe we have an area up here that we have some sellers. Last time that price hit the zone, you guys can see price was hammered back down again. And it went into a level, this yellow level right here. This was a zone that we saw price come up and it tested here, tested here. Now, if you guys remember this level, because you've been following, you can see that this level has been hit and tested here. And again, this is one of those levels that I would call an area of interest. It is hit and been hammered down, hit and dropped, hit and based on its fourth hit. We expected it to kind of break through, right? And it did. And then what did it do? It flipped and it became the bottom. Okay, go down to a lower time frame. You can see after hitting, it based, and we're like, yeah, it's due to break. It went through the top and then boom, enter exploded, enter and went higher again. Now again, we're on our number 4 hit here. So again, we broke through and we're looking for a retest. And that's exactly what we saw. Ended up coming through. And again, what did it do? It retested, it bounced and went higher. And then it did the same thing over here. I'll drop it down to 30 so you guys can see it. You guys can see it came down, it popped, touched, and then got hammered again to the downside. So again, this is one of those levels that is providing opportunity both long and short. And we're kind of up there right now. I'll go back up to the hourly so you can kind of get a clear view of it. So right now, again, if we take another longer short off of that one, be careful. But what I would do is I would move my price down approximately into the 10,938 range. And if price is able to come down to there is a potential bounce that will come off of that zone. Okay. Why? Well, the last time that price was in that area, we had a nice little base and we punched. Then we had a collapse, an absolute just drop in the market, tagged it, and then popped all the way through again. Now we're starting to approach it again, and you're seeing the same type of bit. How do you come up with these levels? Previous price trend? Yep, absolutely, Michael. Actually, the green and the red are indicators that I have for my students. But yeah, this one was actually hand drawn. The yellow, and again, I'm marking it yellow so you can see it. It was something that we've talked about for a few weeks at this level. Okay. What I'm doing, and again, if you're not familiar with price action is reading kind of candle formation, looking at how price enters areas. In this case, it was a drop, a base sideways, and actually this is where the original level was. This was an entry for it. The indicator, if it overlaps something, it automatically goes forward. But what this is the same thing. And you may have heard before, and again, this is not support and resistance, but if you are familiar with support and resistance trading, have you ever heard like old support becomes new resistance? Buying and selling areas, the zones that I use, tend to do the same thing, whether it be psychological, because again, retail traders see those things, whether they're a trap, again, trying to catch support and resistance traders. At the end of the day, I don't care exactly why. I know that they happen and they work, and I've followed them for years at this point. Okay, so again, that's why I have these in yellow. So if price gets back up to 11,237, again, I'm going to get more short biased. I want to see, again, how price approaches. If we have any basing below, and again, looking for this to kind of get hammered back down again. Vice versa, we've gotten two entries down here. We're looking for this 10,938. And again, one way that you can do this is also, again, this is the hourly. I love pointing this out, right? This is the candle. This is the 11 o'clock candle. What time did this one hit? If this is two candles back and it's 12:16 right now, what do I preach every single week about what is one of the best times for reversal plays in the morning? Between 10 and 10:30, right? Well, what time did this happen right here? I don't know if you guys can see it. It's probably too small for you guys to see. This reversal happened at 10:30 in the morning. We had negativity all night. We broke the zone. We retested the zone and hammered down. And what happened? Oh my God, it's going to be negative for the day. And what happens? The retail traders get trapped at again, if you guys can see it, it's right below there. It's probably a little small. 10:30 reversal in the morning. And then boom, we spike back up again. So again, that's why, again, we focus on levels that exist for entries, for targets, as well as the time that these things happen. All right, so that's the assessment on NQ. Let me jump down. I don't want to take too much time. So the S&P. The S&P was bumping up at this 33.59 level. And again, we talked about it last week. We really wanted to end the week up in that area. It was something that I talked to my students about on our broadcast on Friday morning. And you can see that zone provided many opportunities. Again, tagged it, dropped, tagged it again, dropped again, tagged it again, dropped again. We gapped down a little bit. And then this week we kind of came back, but finally after a hit, we went through the base and kind of popped higher before falling back again. So the S&P is kind of catching up. There are some levels a little bit above and kind of the same assessment. Now, the NQ, again, let me go back one. The NQ you can see is not at the highs. It's kind of having a little bit more issues. The S&P is still continuing to push higher, okay? For me, I am looking for kind of the same thing we mention every week, is that failure to go higher. Now, we are kind of messing around in a zone, and again, we're pushing. It's looking for more buyers, but at this point on the 30-minute, what do you see? And again, it had the same 10:30 reversal this morning again. We're seeing the highs are coming in, and it's a high here, a lower high, a lower high. We're seeing a lower low here than the previous pullback. We're seeing a lower low again, and now it's kind of stabilizing, and yeah, it's lunchtime. You're not going to see as much movement. But the question is, how do we end the rest of today? Will this continue to push a little bit farther to the downside, right? That's the big question, if we break this or not. Now, where we are, we're very high in the curve, meaning that I am already more bearish-minded. I do think that there is a lot of events that are out there right now that could provide enough oomph to go forward, right? We don't have any economic news releases the rest of today. We do have some tomorrow morning, and that could provide us enough of a catalyst to help drive us higher. But there are certain things out there right now that could still move this, okay? We have an executive order for unemployment checks, but the last that I checked, and maybe I missed it, I could be wrong, I have not seen the final total of what the stimulus check is going to look like. Now, this is why this is extremely important. And again, if I missed the stimulus check this morning, it's kind of been a crazy morning for me. I've been running around. Here's why this is so important. We're already almost at kind of this near all-time high, right, with the S&P. The first time that the United States got a stimulus check, there was a lot of uncertainty in the market. We didn't know if we were going to lose our jobs or what was going to happen. Could we pay our mortgages? Again, we got these checks, and the checks were not meant to last forever, but we were given money. Now, not everybody lost their jobs, right? A lot of people, companies adapted and changed things around. And what did they do? They morphed in kind of the work from home, and a lot of people work from home. Well, now there's a lot of certainty. If you have worked at home successfully over the last few months and you never got laid off or got put on furlough or anything like that, if you get another check, are you going to fear uncertainty? And the answer is no. And when people have disposable income, what do they typically try to do with it? Do they save it? No. They try to, or they do one of two things. One, they go out there and they spend it, which is great for retail sales, which gives money back to companies, which helps them grow, which helps stimulate the economy, right? Or number two, they invest it, right? Because they want to use it to make money as like a rainy day slush fund, okay? With markets as high, they may put it in gold, they may put it in the S&P, they may try to put it in indexes. But when people have disposable income, they tend to take more risks with it, especially inside of the stock market, which also bodes well to going higher, okay? So I think if we had this, the official, this is what the stimulus checks are, and we get, kind of both sides bantering back and forth, if this is going to be it, or if there's going to be another one, or what's going to happen next, I think that has the potential. That's one kind of outstanding piece of this that we just can't grab right now. And again, I think the S&P is poised ideally for that, because of the three indices, it tends to be the one that is the most responsible choice, right? Now the Dow is also driving higher, right? Now the Dow had a lot more catching up to do. As you guys can see, look at this on a daily, the Dow is still not near all-time highs. We're in kind of a range right now. There's this little wick over wick here, and I'll move this up so you guys can see it. It's inside of this zone right here. I don't know if you guys can see it. I'll mark it off right here. There is a kind of a pullback on the lower time frame, and that's kind of what we're in right now. So although the Dow is driving forward, it's trying to play catch up with its two siblings. I also believe that if we get any type of negativity, if some numbers come in as a surprise or something else, I don't know, God forbid, something else catastrophic happens, the media takes an absolute negative turn, I feel that the Dow is actually poised for the fastest drop back to the downside, okay, based off of where it is. Now, in the hourly, again, it's driving. We do not have one of those failure to go highers. As you can see, the top of that zone is sitting right there. And right now, we do kind of have more of a confirmation, right? The red, the green, the red. This tends to confirm that we're looking down, although, again, we got a little bit of basing right now. So it's in an area where buyers have settled in. Now, this one, again, this is the exact opposite. We watched the other two indices do what? They were more or less driving down, right? And then hit that 1030 and then reverse back up again. This more or less is continuing to push forward, and you can see there's a little bit of a whip back and forth, but less indecision. So again, this is the kind of the outlier for the morning was the Dow. And again, that's also why I feel like when this does turn negative, because this was driving, I feel like this one has the most negativity to the downside. So I am actually looking for shorts for this week. It's going to need a little bit more catalyst. And again, retail sales could be the first thing that drives this down. We may get it sooner than that, but we'll see. Okay. So those are the three indices. Let's jump across to currencies. Now, the Aussie. There's a lot of stuff going on here. And again, the reason why I have a lot of these up, I'll clear a lot of this off for you, is because with us skipping last week, I wanted to make sure that we followed up on where we were from before. So a couple of these areas that I want to mark off, I'll place this one for later. This is a yellow area that we've talked about. And this yellow area as well has provided some great short opportunities. This was actually for my guy, so I'll erase it and bring this across. But as you guys can see, it's kind of done the same thing, right? This same area has provided a lot of opportunity in the fact that it came up, it established, it gave us a great short entry. It came back up, dropped through it again. Again, this is hit number 3, actually hit number 4. We expected a fail. It came higher, grabbed the area of basing, which again was the ideal target. It not only dropped through, it came up and retested that same level again, and then gave us a great short again. Okay, now it did pop, came back up, and again, it's been having a little bit more issues. We just had a retest. This one is very, very closely linked to gold. All right, so for me right now, for the Aussie, I'm kind of looking at this. I mean, we have price right here at 71.60 right now. I'm kind of looking at an upper and lower range, particularly for Aussie news later on tonight. Actually, it's the New Zealand news, but it will affect the Aussie as well. I'm kind of looking for this to get out of this kind of sideways movement. All right. For right now, I'm looking at the approximately up here around 72.09. I want to see how it looks when we get a little bit closer. This was such a nice kind of push down. It's a clear sign that there was a lot of sellers in there able to push this lower. So I'm waiting for this to rally back up, some type of a flip. So 72.09 downside is a little bit different. So There's a few levels down here that have been tested and not tested. I'm kind of letting you guys can see here. It's farther back, but 71.18 on an hourly, you can kind of see it's the lower reaches. Price fell into this zone, and then as you can see, that was really the takeoff point, right? 8-9 candles to the top side before it gap back down. This was a very big area of buyer. So the next time it comes down, I'm probably looking for something there. There's obviously short-term, smaller time frame entries on this one, but for right now, this level has played out so much, I'm probably going to kind of give it a break at this point. Um, eventually it's going to fail on us. And again, I think at this point we've gotten enough movement out of this one to kind of let this one go and let it reset higher low as far as the Aussie goes. Now, Aussie yen is a little bit different of a story. So Aussie yen, as you guys can see, kind of had that same level down here, the 75.69. Now, this was actually one of the Sunday night gap setups. This is something that I've mentioned to you guys in the past, and as you can see, the lower portion of this, where it was tested with here, we gapped right into that zone. Okay, it's a zone that the last time that price dropped into here, it also caused a bounce. Now, it opened there on Sunday, meaning we've been long this position since Sunday night, and we're rallying and rallying and rallying and rallying, and again, it did pull back, and it's continuing to push higher. So if you are still long the Aussie yen, my recommendation would be is you need to definitely start protecting your gains if you're in, and also start looking for an exit, okay, if you don't already have one. For me, I like 76.37. It's up to you whether you guys want to take that as a profit target or maybe an entry. I'm kind of looking at this zone, particularly the upper reaches of it where the price turned last time. I'm looking for some type of a reversal signal. Now, that could look like a couple of different things. It could look for a pullback and a retest to that zone. And again, that would give us our established level of risk. But overall, I'm looking for this to rally a bit higher, grab some orders, and then turn and flip back down again. Again, this is Aussie strength here, but in the Aussie dollar, what are we seeing? More kind of Aussie weakness, right? Some Aussie weakness. And again, look at that news. Where is it? I lost it. Where did it go? Here we go. Looking at the Aussie news for later on this week, what do we see on Wednesday night? Aussie employment change. They're not hiring back as many people this time versus last time, and the unemployment rate is supposed to go up. So is this positive or negative news for the Aussie? It's negative, right? So what does that do for us over here is, well, look, this is rallying higher, this is rallying higher. Now, again, we are a day from that area, but if we can just go up and, kind of start faltering around here, will the market start forcing the Aussie down, this Aussie weakness? Is that what we're going to see? Because the market will pre-price itself before the news comes out. So this is lining up on a fundamental basis for me, okay, for the Aussie. Now, looking at euro yen, kind of a similar situation. Again, this is a pure euro story. Okay, I'm going to go back up to a little higher time frame. And as you can see, we're pretty high up there, right? We've pushed up, and again, here's your 4-hour chart. You can see that we have really just like a race ship, right? A rocket ship, have gone all the way back up. And the last time the price was here, you can see the price went down, grabbed more orders, pop right back up again. So it's a tested level, and we're there now. This is another one of those links that I've mentioned in the past. Now, I don't see really anything out there that's telling me that there's great European strength. If you're looking at the last 24 hours, here's what we've had the last 24 hours, plus 25 pips for it. That is absolutely nothing. So I'm not really concerned. I'm not really looking at this and saying, hey, there's a lot of European strength out there. But yet we're having this rally forward. And doesn't this chart right now, at least on the 4-hour, I mean, we can show the hourly, right? It's very, very high up here, right? It kind of looks just like this, right? We're rallying back into an area where prior sellers have stepped into the market. And then with the euro yen, again, very fast ascent into an area where sellers have stepped in. Now, this is obviously a yen play because it looks very, very similar on the Aussie yen as well as the euro yen. So for both these positions, I am also looking for some type of a short position, ideally around news. News is always the best. But again, any type of major release in the U.S. market could also affect both of these currency pairs. Unfortunately, tomorrow, again, we have pound news in the morning. We don't have any European news. And again, I don't know if it'll hold that long for then, but it could. It could. That would bring us over to this pair, which again, also is rallying, right? Now, we had sell levels up here at 139.04. And you can see it hit one time, it hit 2 times, it hits 3 times. Look at that. On the magic 4th hit is when it finally broke through that level. Okay. Now, this one is also, and again, this the chart that I just went up to. Let me see. Can I pull that out? Let's see. Can I grab it? Nope, I can't grab it. Hold on one sec, guys. Wanted to move this price so you guys can see this a little bit more. Let's see. Let me go back. I guess I moved it down. That's fine. All right. So as you guys can see right here, right? This is the zone that we were looking for, right? This 39, approximately here, right? 39.40 area. Last time price was here again, it dealt with the gap, it punched higher, and then pushed lower. So we're in that area right now. This is a little bit different than that euro yen and the Aussie yen in the fact that it is not at the upper reaches. It's not sitting over here. It's sitting a bit lower, right? So for me, as much as I'd like to say, hey, listen, I love this short, I love this area, it's created a base, right? It's created a base at this level right now. So we need to be a little bit more cautious with this one. If the yen obviously is a big driving force of the Aussie and the euro yen dropping, it will also affect this as well. But at this point, I feel that the GDP numbers coming in tomorrow morning, I think are going to have a big play into this one, right? I mean, GDP is expected to be 8.1%. Is that good or bad having GDP of 8.1%? That's a pretty good number, right? And I think that's what the market is doing right now. The market is adjusting the pound beyond what the yen is doing, right? Aussie yen up, euro yen up, pound yen, which actually has some type of factor that's involved with it, not just the yen play. The market's adjusting for great GDP numbers. If they fail tomorrow and say come in at 6%, is 6% good? Sure. 6% GDP month over month is great. But it's not what the market expected. The market expects more out of the pound. So if it misses, that's also leading us up to a short opportunity. Okay, so I do not have an entry on this one, unfortunately. Again, I'm looking for this one probably a bit closer to that news release, and I will probably stay up tonight, even though I'm an East Coaster. These get rough at 2 a.m. But I will probably, stay up and see if I can get some type of a short entry. Again, I want to see what the news looks like. I want to see if there's any 30-minute basing. And a great way to play this one, guys, if you're familiar with Nadex, again, I love doing these on 2-hour binaries because the strike differential is not that far apart, and these things can absolutely move, particularly with the GDP number. All right? Now, pound dollar. Pound dollar is also in a kind of similar situation. I mean, this is a little bit more basing. As you can see, the dollar, again, we have pound strength, but the dollar has also stepped in and provided some strength for us on this. So, this one is kind of more going sideways. It looks more like this. On an hourly, you can kind of get a better view. For me, where price is right now, we're sitting here at 130.85-ish. I have different orders and alerts and triggers and things like that in the 129.91 area. That's really where price has been tested. I mean, it's pushed twice and kind of rebounded back, and vice versa. There's larger time frame zones and selling up top. You saw the level that we had drawn actually like 2 weeks ago. It's hit here, and again, it came pretty deep and then kind of rolled over and put new levels of sellers in. So if we get back up into that area as well, I'll probably be looking for that as also. As you can see on the larger time frame, we're in this minor zone, but there is another one larger at 132.52. I don't know that we'll be able to get there before the pound news, but I'll tell you right now, the pound GDP is proposed or forecast to be 8.1. If that comes in at like 12, something really big, that's a lot of strength, right? That could easily pop us up to this 132.52. So for the rest of the week, I'm kind of watching that level. And again, I have alerts, I have triggers up there. If price pops into there, I'm getting an email to my phone that says, hey, listen, you need to come check this chart. This thing is pumped into a 4-hour level that's been untested based off something with news related, right? Get back and check this out. So that's kind of what's on my radar for the pound dollar. And again, the pound news tomorrow morning can obviously affect this one. Anything with stimulus and the dollar and things like that, obviously going to affect this. Really for the rest of the week. CPI absolutely has the ability to affect this as well. And again, for those of you who know the parabolic retracement strategy, if we see a big push, like say that it's great pound news, look for that CPI number to be good and bring us back to the start of that actual move. Look for a retrace all the way back again with that kind of flip-flop moves back and forth. All right. What do you see for the U.S. Currency? The U.S. currency war with China. I'll cover that in one sec. I don't really consider it. I think it's completely made up, to be honest with you. And here's why. I don't really believe much of what I see, but this is what they're showing us right now, right? You have Trump says, I haven't spoken to Xi in a long time. Really? Because last week you were talking about, or we heard about it last week that they were talking about, we were going to have the next round of talks. A week before that, what we were doing, we were kicking each other out of each other's embassies. Okay, so at the end of the day, I don't really think there's any war there. Put it this way: if you look at what drives the Chinese economy, it's exports, right? Who do they want to sell their exports to? The United States. So it doesn't benefit their economy having a war with us. It helps and hurts us. I mean, we get obviously cheaper goods than what we produce here. But the reality is, a lot of this is just trumped up. That's all it is. I haven't spoken to him in a very long time. I highly doubt. What is a very long time? Is it 1 week? Is it 2 weeks? Is it 1 hour? Is it 2 hours? Again, this is just spun, right? Both countries kind of need each other, and in a huge, put it this way, we are about to go into a recession. And what happened last time? When the United States goes into a recession, it affects the entire globe because our economy is so large. If everybody else goes into recession, it's absolutely going to hurt China. So at the end of the day, neither one of them can see each other fail. That's just what it is. Okay. Now, euro pound is an interesting trade right now as well. Okay. Brexit is a real thing, right? We still don't have any details about that one. We're not going to really hear much till the end of the year. But as you can see on this one, and I'll bring it back up to an hourly, this one has kind of faded back and forth, but we've been in a pretty defined zone up and down. Now, tomorrow's numbers for the pound will give us a little bit of an oomph forward. A couple of weeks ago, we had the EU Economic Summit, and they came out with their stimulus package. It really didn't provide much movement. The reality is, as we get later in the year, I think the biggest kind of risk for the euro is going to be, is their stimulus package big enough? It was big, but is it big enough? And this also goes for the United States and any other country putting out stimulus packages right now. If we do see a true wave 2 of the global pandemic, which by all estimates could definitely happen, right? What will it do next time? How will it be treated differently? Will people do anything differently? That's going to be it's going to weigh more on the euro than it's going to go on the pound, right? Because the pound, because of Brexit and everything else, was already so beaten down. But I'll tell you right now, the euro coming with absolutely huge stimulus kind of bills is not good for the European balance sheet, because it's not one unified kind of everything. Monetary policy and economic conditions are different from country to country. The euro in bad times is not as resilient as something like the pound, right? The sterling will definitely last. Any of the other countries, right? Any of the non-unified countries will be able to sustain something better than what the European Union will be able to do. So again, I'm looking for probably a bit of movement tomorrow morning, but again, this one is showing us that there's really kind of no major player in this one, right? We've seen this kind of rally or kind of fall back into kind of areas where we've rallied in the past. So that 89 number, and historically that's about where it stays, is in that same range. The lower we get here, the more kind of bullish I'm probably going to get on this one. And again, it could be pound negativity. I mean, Boris yesterday or 2 days ago was mentioning he could quarantine people again at a moment's notice if he felt like it was the most beneficial for his country. So again, they're taking the steps they need to take to be nimble and kind of fight the remaining kind of pandemic. But again, any sign of stage 2 or or phase 2 or wave 2 or whatever you want to call it is going to affect these two pairs. So I'm using this one for diagnostic purposes, not really trading too much of it lately. Looking at the euro. So as you can see, this is a position that we talked about, and I've left it up there. This was a great trade for my group last week, and actually I guess this week as well. But again, we punched through a zone that we talked about being an area of interest. And again, 1 hit, 2 hit, 3 hits. Number 4 is what broke. It retested, entered, boom, 1 to 3, 1 to 5, and then established the bottom and punched back up. And look what it did, guys. The same zone that we had before, this area of interest that we had marked off, provided a great opportunity this morning. And this is a pretty nice move. This is about a 44 pip move in about 2 hours. Okay. If you guys are unfamiliar with what the strike differential is on the euro dollar binaries, as soon as we are done today, I want you to open up your Nadex platforms. I want you to go in there and look at the Forex contract specifications, or just open it up, see what the strike differential is, and tell me how many strike differentials occurred from here at, let's see, when did this start when we tagged this zone the first time? From 8 o'clock, or actually, I guess, yeah, from 9 o'clock in the morning till 11, how many strike differentials did it cover in that time frame? And then let me know if you would have been able to set up a trade. Because like I said, these 2-hour binaries in the morning have been providing great opportunity. And this is an old level. Now, would I use this level again? You may say, hey, listen, Brian, can I do it next time? If this happens tomorrow, can I take the same trade? The question is, I'd be very cautious with it, and here's why. Okay, this was a previous buying level, right? It's been tagged a few times. We expected it to fail. It's retested, and it's actually pushed pretty deep into the zone. So if anything at this point, I would probably be taking this and flipping this over and actually using it for more of a long opportunity at this point. okay? And only because it's really pushed deeply in, it's hit multiple times. So again, it would look very similar to what we had here. It's a break above this level, a retest down, and then a launch forward. Now, if you can time that with news, that's how you play it, right? Now, there's not really much European news, but think about this. If we can get a rally the rest of the day and maybe the European session, yeah, weak dollar, strong euro, and it punches up and then pulls back again for the news releases. And again, just to refresh you again, here's your news releases tomorrow. CPI, the number one focus of every gold trader right now. CPI, could that provide opportunity for us tomorrow? Sure, absolutely. Sure. I mean, it could push down. Again, we may be talking about these lower levels. But again, if we do get a rally back up again, watch this level, particularly around news. And it could be used for long or a short tomorrow. It's really going to depend on what we see in the after hours. Okay? But definitely a level that you need to respect. Right? People will see this and say, oh, what didn't work? It didn't do anything. Yes, it has provided one opportunity, two opportunities, three opportunities, four opportunities, five opportunities at this point. If you don't follow it, you're just, again, you're blind to, what's happening behind the scenes. Okay? So keep an eye on that one. Now, dollar CAD. Dollar CAD I talked about last week, really getting back down into kind of lower levels. You can see this one is pushed, pretty far down. And again, this is, dollar weakness, CAD strength. We saw a little bit of it popping up last week, and there's been a few entries in this level as well. You can see here that there's another one of those break, retest, and collapses through. So, and actually this zone should be this big. It should be kind of in that range, probably here. Let's move that over there. Should be this range right here. Okay. There we go. All I did was refine it down. I had it originally drawn on the hourly and just refine it down for you guys. But you can see, why did I draw this here? And again, this is important. This is one of those golden nuggets that I love to give you guys. We had a nice base and an explosion. And what did it do, price? The next time it touched it, it exploded again. And what happened again? It touched again and boom, exploded up and then finally collapsed. And what did we use? There's your entry and there's your fall. So at this point, I would be looking, for any type of long targets. Again, if you are short this position, 132.56 is an area that you definitely have to watch out for. Again, look for some type of a confirmation bounce, a hit, a pull off, and a retest back down again. But I'll be looking for that. This will be affected by the U.S. news as well as crude oil tomorrow at 10:30. This week, there is really no outstanding CAD news that is going to be great. They are purely on vacation. So this will be a pure dollar/oil play. You better catch that later. Now, dollar yen has been moving. This one has had quite an explosion. Again, price is sitting right here at 106.51. Okay, this was the level we were looking for last week. So areas that I'd be watching out for, right now, probably up top here. I mean, there's a little bit of a zone sitting right in here, right? There's a little bit of a zone. But for me, I don't know. The way that this reacts, drops, and pushes through, I think we need to wait to 107.17. It's got some room to run. It's got about 56 pips right now to get up that high. The daily ATR is 76, so it's got about a day worth of movement. It's possible the rest of today and then into tomorrow morning, like pre-market wise, it's possible that it can rally up there. And then again, it's going to need some help from the market. But if price is able to rally to there, I actually do like that zone, and I do have confidence that that zone will hold into consumer sentiment or into the CPI number tomorrow. And again, that's going to require quite a bit of move up, right? It's going to require something like this over the next, 3-4 candles. And at that point, it's a news release, it's a parabolic retracement, it's got a whole lot of things. But 107.17 for me is kind of a big one that I'm looking for. Not much else on the lower time frames. 106 is probably an area where if price comes back, it will take a smaller bounce off of it. But right now, I'm kind of cheering that this gets high. I think it's just a higher probability if we get up to the 107.17. And I'm still learning, but how low of a bottom can you expect the market to go hit on average in a day? That's a great question about talking about averages and how much can things move in a day. I've mentioned it just a little bit here, but do me a favor. I want you to go out there and look up ATR, average true range, and I want you to kind of fluctuate back and forth and look at 4-hour time charts and 1 hour, or I'm sorry, one day charts, daily charts, and look to see what the average move is. That's what I have at the bottom right here. So you guys can see at the bottom of my screen. What is this thing? This is the ATR. So here was that initial March crazy, COVID craziness, and you can see our average move a day was approximately about 70, and it spiked all the way up to 240, right? huge, huge, right? 3 times the amount of volume, or 3 times about the movement every single day, but prices come all the way back again. So you can use a tool like ATR to help you see how much, on average, it has the potential to move. It's not guaranteed to move that. It's nothing but potential. And that will help you pick your profit targets and entries, particularly with Nadex. Another thing that I actually just had this conversation with one of my students, I use ATR a lot, especially on the lower time frames. When you're buying or selling, particularly binaries, the one thing that you really need to focus on a lot is how long till expiration, right? If it does not have the power, again, using something like ATR, to reach your profit target before expiration, you may have to get, whether change your profit, change your entry, change what, time frame you're using, or what duration binary. There's a lot more pieces in the game that way. And again, I use ATR for all those things. Okay. Now, dollar Swiss. Okay, what's happening with dollar Swiss? Well, all kinds of stuff. All kinds of stuff. So we saw all this weakness. We saw, bombings in Beirut pop back up again. And then again, we all forgot about Beirut this weekend, and it's starting to pull back down again. And then this morning, you have comments like Trump saying, I haven't even talked to the guy in weeks. And again, anything between the U.S. and China, as I've mentioned in the past, will always bring power to the Swiss. Why? It's kind of like the flight to safety. I mean, they're always in neutral. If there's a, quote, war, I mean, we're not shooting bullets and missiles at each other. It's going to be a trade war. It's going to be like some type of cyber currency war or something like that. Anytime you hear those things, you're always going to see a spike in this one. That's just what naturally happens. But what we saw, again, we forgot about Beirut and the explosion. Brings us back down again. Because again, this is the explosion. It's like, oh God, what's happening? And then we forget about it and it comes back down again. And then you have comments like that Trump says, I haven't talked to the guy in weeks, and it pumps it up again. So for me right now, again, price is sitting right here now, 91.56. If we can get back higher into the 91.90 range, you guys can see that the area's been tested here, tested again. It's probably worth one more test. That would be, the area is starting at about 91.77. There's a short in there somewhere. Again, time of day, media are going to be big players in this one as well. Okay. All right. So let's go over to my 3 last and most fun charts. The first one being gold. What is this? Gold is dropping. Of course it is. Nothing's happened. There's no big stories about how the United States is printing money faster than we can make paper, right? That's what this one takes. I mean, if I say, why do you buy gold? 99.9% of you are going to say inflation or printing money. Well, we haven't seen the inflation. Tomorrow's CPI number is important. With this big fall from grace back down to 1944, with that big fall back again, you got to really be wondering, like, well, why is it coming back? Like, we were up here at 2063. I bought it here because that's what everybody said to do. Why is it falling? Well, I mean, there's been some great trade opportunities. I mean, here's your level. Here's a test. It hasn't been able to get back up. We're not seeing the inflation here. Okay, without inflation, gold can't rise. Okay, if all of a sudden they say tomorrow that every person's getting $2,000 check and families can get up to $8,000, yeah, this thing will spike to all-time highs. So for me, in the near term, with the absence of news, again, I think there's some great shorting opportunities. Now, we are in an area right now. Again, the last time the price was down here, we had a little bit of a hiccup here, but you can see price came down and was stabilized. You're seeing these wicks, one here, one here, one here, and I could draw this, and this is a big zone, but you can see that that's kind of where the last time, not that big, right? What happened the last time that price hit this first wick? It bounced. It hit it again. It's starting to bounce. So the question is, will this area hold? Will it not hold? This is such a big move down in such a short period of time. It was so fast. I am expecting some type of a bounce off of this and push up. And again, could this be gold positioning itself tomorrow? I mean, think about it. If you want to buy an asset like gold, right? Do you want to buy it when it's at its absolute peak, or do you want to buy it when it's on sale? And the question is, and the answer is, you want to buy it when it's on sale. So with a CPI number, again, let me bring this back in, with this CPI number coming in at 830, that's expected to be not great. It's still positive, but with it expected to be not great, if this comes in closer to what it was before, meaning that we see prices and inflation going up more than what's expected, what will that probably do to gold? It will send gold back up again. So it's kind of setting up where it's coming down here. It's trying to find some sellers. And again, if that inflation number says, hey, listen, inflation starts rearing its head, the first reaction of traders in the market to inflation is what? Buy gold. Boom, as that pops. And remember, gold is an asset that we don't actually use up. It's not like oil that we're using it or coffee that we're drinking it. All the gold that's been pulled out of the ground still exists. It's purely a speculation play. So I can see gold taking a bounce. Now silver is also collapsing back down again. We had a zone sitting over here. This one kind of shot back through. And again, depending on what Nadex binary you used on this one, there was a great little trade setup. And again, this one has also collapsed. It came back into an area. This 2667 right now is in an area where, just like gold, again, we're seeing, there's some, we saw some. Actually, I can move this over. Let's see, can I find it? It's right here. Right. That's kind of where the zone is tested at. Right. This original base and then drop. So we got a little bit more to go in this one, but I think 2667 is an area that you need to watch out for. And again, kind of the same idea. If we don't hear anything about stimulus, if that inflation number comes in lower than what the forecast was, don't be surprised that this is back at $24 tomorrow, back down in this range. Okay, I could definitely see that happening. And again, if you're looking for a way to play that with that news, again, there'll be an initial spike. We'll see if it's able to push through the zone. This is a zone that's been tested, but again, this is that Harry Potter trade that I mentioned every week. And every week I get an email. Harry Potter, what's that? What is Harry Potter trades? No, it's just it's a continuation pattern to the downside. Again, a pop below, a punch up, and then a continued push to the downside. If we break through this zone, and again, this is approximately 2659. All right, but I definitely, again, with a lower than expected inflation number, I absolutely can see this popping and pushing to the downside. All right, so don't be surprised if we see this number. And again, could it bounce off of here? Sure. I mean, if we go down to here and the inflation number is higher than expected, this is absolutely an area where we could hit it, pull up, bounce, and then go. It would look like something like this. Whoops. It would look like this. We'd take a bounce off of it. It would pull back down again. And again, that's your telltale sign that, yep, this looks good. And then you'd have a punch like that. Okay? So that is absolutely one possibility of what could happen, right? The other one would be if he bases in this zone and then punches down, just flip this. And again, there's your Harry Potter scar, not as far ahead, but, back to the downside. All right. Now, last but not least, let me pull it up on the other chart. Let me go grab this one from TradingView to get the most updated information. Let's see, crude oil. All right, so it looks like crude has pushed a bit higher. Let me pull this back up and we'll drag this over here. I have so many monitors at this point. So here is what we had marked off in crude. Now, crude has been really focusing on this lower level here, right? We talked about this level down here. We've talked about it for weeks now. It was the same thing. It was an area where price, was bouncing off of it here and here and here, and then all of a sudden it came the bottom, and then it was boom, and then came again, sucked into that area again, and again bottom again. Oops, oh god, I moved it. And then again we hit it again, and then it bounced off. So it's been an area that's just been again a zone, an area of interest that we've had to watch and follow. Now, price has pushed a bit higher, so. This going up, again, not surprising. We talked about entries in here where you're looking for another hit at this level. It's kind of pushed back down to this 42 range. We're not at peaks, and there was a little bit of a zone here, and you can see that this kind of hit and bounced and kind of hit and pulled back, and again, it did its 4 hits and broke before turning and flipping. So oil, the best way to play this one, and what I found over the last probably couple months now, is we really need to look at this tomorrow morning. Okay, the inventory report is at 10:30. Last week, most of the activity happened before the report. And even though there was an absolutely huge miss, we got almost no movement whatsoever. None. And that told me one thing. Okay. Whenever you see a huge miss in an inventory report number and there is no reaction in the price of oil, it means that traders are looking at something else. Okay. If we were down by 10 million barrels, this thing should have popped, and it didn't. It actually went to the downside. What it's showing us right now is the dollar is more in control, as well as people are focusing on what the demand of the economy looks like going forward. If we don't get big spikes, typically that means that they don't see a positive outlook for the economy. Kind of opens your eyes to a couple things, right? Huge miss, no movement, it actually goes down a little bit. And then obviously days later, a rally. But we have really been unable to leave this range. Here, I'll shrink this down a bit. Look at this. We have been in this range for such a long time. I mean, we're talking back to July 20th. We're at almost the exact same spot of where we were. And actually here, the line's the same. So as of June June 23rd, right? We haven't moved. And if you go back even farther, you can see we have really been stuck in the same, again, here's that blue area, and we go farther back. We've been messing around with the same blue area within $1 for over a month now. Question is the inventory report tomorrow going to be able to bump this out? Question is, I don't know. I mean, but areas that I look for in here, again, I think this, 41.28 is an area we got to watch out for. Again, your risk on that would be down to 41.05. That's a zone that, again, has held time and time again at this point for longs and shorts. If we're able to kind of come in here and we base and we break through, don't just, say, oh, listen, I got stopped out of my long. Look for a retrace back up again and look for a short, kind of a flip of what we have going on here. It's just done it too many times to completely avoid it, and it keeps establishing new levels. And what I mean by establishing a new level is we based, we popped, we retested and said, hey, listen, buyers stepped in, and boom, off to the races. Top side, we ended up hitting, pulling back down, and we hit, we based again. And then again, 1, 2, and 3 is finally where it kind of based and broke through the top, and now it's falling back again. It's fighting. The sellers have stepped in from the top side. And the question is the short we're in right now, will it come back down to 41.28? And I would say right now, it's got a little bit of, a couple buyers in here that it's probably going to speed bump off around 41.90. But in the overnight, again, those same buyers are probably not going to be there in the overnight. If we can push down, again, looking for a long opportunity out of here tomorrow morning for inventory. All right. So guys, that's the last of the kind of commodities out there. Like I said, I think the big ones we need to watch out for is gold. Again, be cautious with it. I think Nadex is an absolutely perfect asset to play it in right now. Again, because you had that limited risk entry on pretty much everything that you have, actually everything with Nadex, right? It's a great way to play this right now, just in case you hear this gigantic stimulus bill just all of a sudden. All right, that's it. Bam, everybody's getting $5,000. This is the last stimulus check, $5,000. Make it last. Something like that will obviously spike gold through the ceiling. But until we hear that news and there's just the bickering back and forth about this and this and this and this, and again, Trump has kind of pushed the buck down the road, but his executive order. I consider, I would think being bearish is probably not bad, but definitely be cautious tomorrow with that CPI number. Consumer price index is definitely a gold mover, and again, better than expected. Better than expected, meaning we see more inflation. Gold will go. Gold will be moving. And same thing. If we don't see inflation, or if it's, God forbid we get negative, right? God forbid we get negative, right? If it's negative, gold's going to tank tomorrow. So we'll see what that one comes out. All right, guys. So with that being said, make sure you mark off your calendars for Tuesday the 18th. I did go over a lot today, so if you are new, like Antoinette, if you have any questions about anything I said, you're more than welcome to kind of check me out on the website. You can email me. My email address is the bottom, support@keeptradingsimple.com, and I'll do the best that I can. Guys, have a safe trading week, and I will catch you guys next week at the same exact time, 12 Eastern, and I'll catch you then. Everybody be safe, and take care. Bye-bye.